Rio Tinto and Alcoa expressing disappointment over the new NAFTA deal, which fails to resolve the ongoing tariffs on aluminium. The resources giants calling for the lifting of the current US tariffs on imports from Canada, as well as a full exemption for Canada and fair trading partners. Let's get you across more on these moves and what's driving markets. I'm pleased to welcome Peter McGuire from XM in our Sydney CBD studio. Peter, good to have you with us today. Now, despite the positive tone that we saw on Wall Street overnight because of this new NAFTA agreement, it looks like the ASX today is actually trading relatively flat to just dipping into negative territory now. We're probably a bit too far removed, would you say, for it to have much of an impact for us locally?
Well, good morning, Leanne. I'd say so. I mean, look, we've had a long weekend. We're very conscious. We'll see what happens in Tokyo today. There's talk that, there's more momentum to the upside there, and that could sweep us up after lunch. So at the present, we're just having a very easy morning, and that'll be interesting how the rest of the day plays.
Now, we did see those US stocks receiving quite a nice bounce overnight after that new trade agreement between the US, Mexico and Canada. We tie that back to obviously what that means for the central bank. I know that we're watching some data coming out from Canada a little later this week. Do you think it makes it more likely that the Bank of Canada will raise their interest rates in late October? I believe it is a meeting.
Yeah, well, there's every chance that they could, and fundamentally they're very happy. And I was listening to Trudeau this morning, so he seems to be fairly settled. There's a couple of other little points that he needs to work through, but overall they're moving quite nicely, and the loonies had not a bad currency to trade over the last 6 to 7 months.
Look, speaking of central banks, I might just want to just bring it back locally, actually, because today it's all about the Reserve Bank meeting, 2:30 p.m. this afternoon. How is the market positioned as we look ahead to that RBA meeting? Are we likely to see much of a reaction, if any, especially if it is a non-event like most are calling it to be?
Well, I think it's going to be very much a non-event. With 24 months, and this will be number 25, I think. So, fundamentally, we're talking about, our economy here. Interest rates, the overall sentiment is relatively okay, but, I think from a housing perspective, we've seen a cooling across many different, larger markets, and that's taken the wind out of the sails. So I think it's going to be very much the status quo, and probably for a few months yet, Leanne.
So how are we seeing markets positioned ahead of that event?
Well, it's been fairly quiet, and when you're talking about analysts, looking at these markets, I think really taking that wind out as far as real estate markets and overall, sentiment. We're thinking that you're probably looking sometime towards the middle of next year. Let's see what happens with the states, and banks are raising rates anyway, edging them up. So I think that that's going to be, the hidden agenda there, and I think that the Fed will probably hold them, standard and keep them along those sort of lines at the moment, our Reserve Bank.
Yeah, of course. I think that is one of the big developments since their last meeting, is that 3 of the 4 majors have raised those interest rates, putting even more pressure on the average Australian household. So looking for comments around that area, as you say. We are watching the Aussie dollar, which looks to be fairly stable, actually, ahead of that decision. Also looking to a couple of PMI numbers coming out of China, which will be interesting, especially in light of that weak factory data that we saw over the weekend, showing that perhaps these trade issues are starting to bite the Chinese economy. What sort of direction do you think this data might provide, especially for the Aussie dollar?
Well, the China situation, it's not as bad as many pundits are claiming. And when you're thinking about what's happened over the last couple of months, the trade issues, as far as President Trump, that's causing major concern internally in China. And I think that's ready to wear through. We'll just see what happens as far as the president's concerned over the next, 6 to 7 days. And if he continues the pressure on there, then I'm saying that, as far as PMI numbers, growth numbers and so on, it's going to be a fascinating quarter from, the Chinese situation. I think, fundamentally, it's not a bad place to invest, and, the overall story, it hasn't really backed off too much. They're still very, very strong. GDP's relatively good, and overall, it's a fairly strong and growing economy, as we've seen for many, many decades.
Another economy that continues to grow really strongly and markets are reacting, certainly not impacted by the trade issues at this point, is Japan. We're seeing the Japanese market absolutely on fire at the moment. It's highest in nearly 27 years. I know, Peter, that the Bank of Japan's closely watched quarterly Tankan sentiment is due out soon. I think it is. What are we likely to see there? Is that likely to confirm the fairly upbeat view on the Japanese economy?
Well, I'd say so. I mean, I can remember putting your mind back to 89, Leanne, it was 39,000 points for the Nikkei, then it washed out all the way through to 8,000. So to see it around these sort of numbers at present is a wonderful recovery story. And I think you've probably got more momentum. I wouldn't be surprised to take a 25, 26,000 handle for the Nikkei out by the Christmas. So it'll be a strong 3-month growth. And as far as, the overall numbers, though the hidden one there, of course, is President Trump prepared to move his eyes across to somewhere like Korea and then to Japan from a trade issue? And that's probably just a bit of a work in progress. So I don't think he's going to back down, and that could cause a little bit of cold water on the market.
All right, fantastic. Peter McGuire, we'll leave it there. Really appreciate you joining us today, though. Thank you so much.
Thank you.